Hey everybody, it's Pete. Welcome to Stock Trading Pro. Today's Stock Market Live, we're going to review the big earnings that just recently came out. We're going to talk about one hot sector that nobody's talking about right now and how we can integrate with those. We're also going to talk about a super hot stock and a group of stocks that have basically rocketed higher probably for the last 4 or 5 days after earnings. I think that they need to cool off for maybe a day or two. So I'm actually looking for them to pull back for, let's say, Wednesday and Thursday, and to set up a new swing trade from Friday into next week. I'm going to give you those stocks as well. But I have a very important message today, and it's something that we're constantly seeing right now in our coaching calls. And it is the current price action in the market and how much it's confusing everybody here in the middle of October, right? This is the thing you need to pay attention to. If the stock market right now is not doing anything that you feel comfortable with, stay in cash. Your job number one is PPC, protect precious capital. Never forget that. You should only be accepting risk when the market looks exactly the way your edge needs it to look. So don't be afraid to do nothing, because sometimes that's actually smart trading as well. I just want to announce also on Friday's live stream. So Friday morning, we're getting a lot. My mug is getting a lot of publicity here. We're actually going to be raffling away 2 mugs on Friday morning. So make sure you come back on Friday. These are, I love these mugs. They're brand new. All right. So obviously the big thing we're going to talk about right now is Netflix and Tesla. We're going to do it. First, we're going to dive into Tesla stock. Is Tesla earnings going to have a new all-time record? Quite possibly. However, it's the expectation of that number. So even if they beat that number, what percentage did they beat it by? And does the street like that growth number? Tesla stock and Tesla price action has gotten beat up pretty good over the last, I don't know, let's say 5 or 6 weeks with the market, and pulled back into a really, really big support level. If it breaks that support level and the market perceives it as PE ratio is too high, cash flow is not sustainable, if we break that level that I'm going to talk about right now, the next level is at least another $25 to $30 lower. So we really need the market, and for Tesla specifically, to hang on to that support. We're also going to work our way over into Netflix stocks after earnings yesterday, which just absolutely exploded. Hopefully, if you watched Monday's Stock Market Live, we actually talked about 250 being the big level to watch in Netflix. Got up there, pulled back, got up there, pulled back. And then finally yesterday, after hours, it finally just launched right through that level. So we're actually going to map out a trade in Netflix, a swing trade in Netflix from today on Wednesday through Friday. A very short-term swing trade, 3 days. If it does this, then we know exactly how we're going to map out the trade. So we're going to have risk defined. We're going to have the time to exit the trade defined. Everything is going to line up. We had a bunch of good stuff to talk about today. Stick around. Be back in just a second. Okay, so thank you so much for joining me here today, everybody. The very first thing I want to talk about is we're going to jump into what the market's doing. And as if you're a regular viewer of the channel, you know this is something that we teach every day, is the stock market power pyramid. We're going to first take a look at the market, and that's actually why I started out today discussing if the market lines up exactly the way that you would like to see it. So you can actually see the futures are down a little bit right now. They're down about 19 points. And it's actually something that we called for yesterday. Now, this is a very big thing. And we actually spend a lot of time saying that if you know what you're looking for, you're never lost. But the other part of that as well is when you're looking at stock market price action, if it's doing exactly what you expect it to do, you have to have conviction and get in there and take the trades that match your edge. But here's the big thing. If the market is doing something, but you know, it's kind of like your spider sense starts to tingle. I'm a big comic book fan. I love Spider-Man. When something is happening that should not be happening, that's a signal as well. So yesterday in our Discord community, I actually posted in there yesterday, I'm expecting a lower opening in the market today. And I want to give you a quick lesson that you can use right now and every day. So we know as buying pressure comes in, you want to start to see buying come in and volume. That volume is real money being spent to validate that buying pressure. So as it keeps going higher, you should see the volume continuing to remain steady. Now, here's what we saw in the market yesterday, and this is something you could use every day, because remember what we talked about, I believe it was Monday or last Friday. You want to keep your stock market analysis simple, but one thing that you need to run every single day is a scan for stocks trading higher than average volume. Very, very important, because you want to see heavy volume usually ends a move. Heavy volume usually starts a move. The difference is where that volume happens. Now, over the last 4 days, the market has rallied, but over that rally, the volume has actually been decreasing. So it was something that I spotted yesterday. I said the market was great, had that big move to the upside, held a positive number, but the volume was decreasing over the last 3 to 5 days. And I just want to give you a quick visualization of what that looks like. If we can drop, I don't have volume on the chart right now. Something's going on. Anyway, trust me when I tell you, I don't know why the volume didn't pop up in there. We'll take a look at that later. So anyway, let's take a look at Netflix. And the big thing with Tesla right now is what they're expected to do. Now, here's the important thing, right? Poised for near record earnings. Now, a lot of Tesla enthusiasts are going to come in and say, wow, Tesla did X billion dollars. That's awesome. Why isn't the stock going up? Remember, we talk about this all the time. The earnings that get reported by the companies are for the previous quarter. So if you already own that and earnings beats expectation, you are taking advantage of the fact that you already owned it. What we are buying now, however, if you're not in the stock yet, if you haven't invested in that stock yet, is very important, because we are now buying guidance. We're buying future cash flows. So very similar to what we're about to talk about in Netflix, where they said, stop looking at subscriber growth, pay attention to the fact that we're actually earning money. That's what we want to focus on in Tesla today. We're going to get to Netflix in just a second. So when when Tesla stock reports today, this is what we're going to be looking for. Now, the biggest thing in the conversation, okay, expected to report record quarterly profit. But again, remember, after hours today, it's about the expectations and growth targets. So again, growth is the big thing. So if you're brand new to kind of the financial side of investing in stocks, it's the growth and the expectation of that growth is what moves stocks. We get the question all the time, why do stocks move up and down in general? But more specifically, why sometimes when you see a stock has better than last quarter's sales numbers, why sometimes do those stocks go down? And like we're seeing right now, and especially in the financial stocks, why are we seeing stocks that had lowered expectations rally? It's all about the growth rate and what was expected. So we saw that actually in the financial stocks this week, or actually last week and heading into this week, where the numbers came out, they lowered the expectations, but those expectations were beat. So they lowered what was supposed to come out and they rocketed higher. So now we have to determine, is Tesla, which is scheduled to report, I got to be careful of how I say it, scheduled to report after the market today, is it going to be bullish price action and a bargain right around $200, $220? Or is Tesla now going to be a dumpster fire where if it does finally break through that $208 level, the next level is $180? So it's got almost a $40 move to the downside if expectations are not exceeded. Now, here's a very important part of reading the earnings when the news comes out, because like a lot of active traders like, yeah, let's go in there. Like Netflix yesterday exploded right away, went up, I think, $35 as soon as they reported after hours. Is you have to be on top of the expectation and how that's perceived. So in other words, whatever the number is for Tesla, if they meet that expectation, that is going to be perceived as bearish. So in other words, if we say they're expecting to grow by X amount and we hit that number right on the button, that is not fantastic. The Wall Street wants them to exceed that number. So when you're watching the earnings, we're going to talk about Netflix in a second. When you're watching the earnings, those are the things you have to pay attention to before you just jump in there and make a decision. And we're going to take a look at the charts. So essentially what we're looking at right now, strong vehicle pricing is forecast. So remember, forecast, anytime you hear forecast or growth, those are the same thing. Those are based on expectation. Expected to generate around $3.2 billion in quarterly profit for the 3 months ended. So again, this is what's expected. So even if they do exactly what's expected, that's not going to be perceived as good. So that's what we have to take a look at, right? So there's other factors in here right now. Rising interest rates, that's not new. Recession fears, that's not new. So let's think about that as well. Recession and rising interest rates are not new. So if that goes into the conversation today, that's not new news. That's already factored in. It's all about that number that we just talked about and how it actually comes in. If it comes in lower, that's dumpster fire. If it comes in where it was expected, okay, it'll probably react a little bit in both directions. But if it actually beats, that's what we're looking for, the growth above what's expected. Now, if we can map that out on the charts and take a little bit of a deeper look into where Tesla is right now, you can see this is the level that we've been talking about. Now, this was the last earnings report. So we're almost at that same spot, right where earnings came out last time in Tesla. The difference now, though, is we're resting kind of uncomfortably right at the support level. So remember those three different levels of expectations that we just came out with. Now, the challenge for the Tesla enthusiasts right now is whether or not we're going to rocket back up to that 300, 310 level based on the expectations, or we got some minor support over here at 180, but then after 180, we're talking about 150. So this is the big thing now. We talked about this recently as well. Are you a trader of Tesla stock, or are you an investor in Tesla stock? Investing has a much longer time frame perspective. You believe in the dividends, you believe in the future cash flows, and you love the company and you're holding it for the longer term. And maybe this $200 price level is just an amazing price. You might not have thought price action getting down there. If you are a trader, it is trader heaven right now. And I'm actually going to take a look and show you what we talked about, because in our newsletter that we put out every day, which is part of the research that everybody in our community gets, we talked about the kind of trading that is massively profitable right now, predictably profitable, dare I say that, okay? If you understand. Now, something I want to point out here as well, it's very important. We get a lot of people that come into our boot camp, a lot of people that come into our bigger programs who understand how to read charts. And I want you to write this down because it is super important. Chart reading is not trading. They're very, very different. And again, I like to use driving a car. If you could visualize you went to motor vehicle and you passed your road test, that's chart reading. Trading is when you actually get behind the wheel and you're driving, and now you are responsible for making decisions. Tape reading right now is a shorter term method of looking at the market where, again, if you watch what we do, order flow and tape reading are the two primary parts of our New York method trading strategy. Right now, tape reading, which is where is price moving right now, is what's winning. So I just want to point that out. And I want to show you how we outline this on our newsletter today. Let me actually make this a little bit bigger. And you can actually see the entire newsletter of how we break the market down throughout the week. And you get an idea of what we do, break it down into individual industry groups. But I want to talk about today, heading into today, okay? Volatility right now is absolutely amazing, okay? Now let's define what volatility means. Volatility means these pockets of momentum. So when you hear somebody say momentum, we're talking about the next move and then a pause. So remember, a lot of what we do, order flow is the big picture. So if you can imagine just looking at a chart and say, wow, it's really obvious that buyers are in charge. It's really obvious that sellers are in charge. And for the majority of 2022, sellers have been in charge. That's the first part of it. The second part of it now is we look to take advantage of momentum in the direction of that dominant force of the market. This year in 2022, the stock market crash has been better momentum trades to the downside. So maybe you buy puts and expect the market to go down. Maybe you're trading the inverse ETFs. They go up when the market goes down. Or maybe you just understand short selling and you're making money as stocks go down. The challenge we're having right now, and I just want to point this out because we're going to go over the last 3 weeks of price action, maybe even 4 weeks of price action. The point that I want to get across here right now is if the market in the big picture does not look clear, then that means you have a decision to make. Do I want to trade short-term price action, or do I want to step aside until the road opens up again? A lot of people right now are saying, I don't understand what's going on. I'm going to do nothing. And that's a smart play if it's not matching the way you look at the market. For somebody like myself and a lot of members of our community who are very active, maybe from one day to the next, holding trades a couple of days, maybe even on the day trading side of things, tape reading is ruling the roost right now, which is going to take us into that Netflix trade that we're going to talk about from Wednesday through Friday. So the conversation that we just described what volatility is. It's that momentum in the context of order flow, but the order flow is murky. So what I want to point out here, and this is something that we talked about quite a bit recently, if you are swing trading and holding trades a little bit longer, it's best that you look on the weekly charts. So this kind of price action is what we want. This is the one where we step up. We're like, yeah, buyers from 1 week to the next, they're doing the same thing. And we can see that over here, right? Boom, 1, 2, 3, 4, 5 different weeks, right? Amazing, amazing, right? But the majority of this year has been this: selling pressure, selling pressure. The challenge that people are having right now, and I want to say this as your friend, the challenge that people are having right now is when the market gets choppy on a week-to-week basis, you don't recognize it, you continue to trade, and you're getting chopped up. So what I'm about to show you can help stop that. You eliminate the time the market is not obvious, but then you know what you're looking for. Because remember, if it's there, it's easy to make money. Again, everything is educational videos here, right? It's up to you to make that final decision, but I want to tell you what I do. When it's obvious, it's easy to have confidence and make money. The problem is when it's not obvious and we continue to trade and get angry at the market that it's not doing what we want it to do. That's where money goes to die. So when you're looking at charts, you need to have this visually, maybe print this out because it's very, very important. This is what we're looking at. We're looking at institutional activity, smart money, paying higher prices from 1 week to the next. And if you know candlestick charts, this candle is green because it opened there and closed there. So throughout this entire week, from Monday through Friday, buying pressure. From one Friday to the next, buying pressure, buying pressure. Let's take a look at what we have right now. We have selling. We have a mess where it went all the way up there, came all the way back down, went all the way down there, came all the way back up. Now, here's the big thing I want to get across is if you take a look at the last 4 weeks of price action, it's been dancing around this 360 level for roughly 4 weeks. We're above it, we're below it. We're above it, we're below it. So now, take a snapshot of this. It's critical and super simple. But here's the thing, though. Having the tools and using them, having the tools for stock market price action and using them, that's not the same thing. So what our goal is here, what our mission is to help you recognize quickly, is there something to do? If there is, cool, we'll look for entries. If there is not, that means we need to make a decision. Do we want to trade for much shorter time frame trades for cash flow, or is it better for us to just step aside when the road opens up again? So if we take a look at the current 4 weeks in the market, it's been very choppy. We haven't been able to get out of this down to up to down to up. It's been very back and forth. So what we need right now to have conviction to be buying in the market right now, this is a good start. So far this week, the market and deep pockets institutions have created a higher high and a higher low from last week. That's a great start. Now, this week is still within this 4 weeks of price action. The bigger trades, the one where we could step up and say, okay, the road's opening up a little bit, is if this week maintains that price action. So again, remember what we just talked about with tape reading. Let's actually go back over to that just for a second. Tape reading. We're in full tape reading mode. So the last 4 weeks have been back and forth. So the big picture is bearish, but the last 4 weeks is murky. So that's a signal as well. If it's not obvious, you got to protect that capital. So we're in full tape reading mode right now. Short-term price action is king right now. And for those with your trading platform set up properly, there's a ton of opportunity. Now, again, going deeper into how we set up the stock market power pyramid, we're going from the bottom. Is the big picture obvious? We just answered no, very short time frame. Move up the chain a little bit. Are there any sectors that have obvious buying pressure or selling pressure? We'll get into that in a second. And then within those sectors, can we find some groups and stock-specific ideas? So what we just covered and what we walked through is how you stack the order flow. There's a couple of different ways of stacking the order flow. We can't really get into it today, but the bottom line is this. You saw that pyramid. It's very, very deliberately built where the bottom of that foundation, the biggest part that you want to lean on is the market obvious? And right now, over the last 4 weeks, the answer is no. So we don't have that big solid foundation under the idea. Now we move up one ladder. Are there sectors that we could take advantage of? Maybe a hot group of stocks right now. So we're actually going to work our way over to that a little bit because there actually is. And we mentioned that before. So if we take a look at the nightly research and hop on over to sector rotation, you can see here coming into the day, financial stocks have worked their way up the list. Industrial stocks have worked their way up the list. So if we're looking at the stock market power pyramid and looking to set up another trade, now we're over here and going into specific areas where money is flowing into those groups. But remember what we said before about tape reading. If we take a look at some of the financial stocks and how they've traded over the last week, and I'm going to use JP Morgan as a big example of that, this stock is flying to the upside. So remember what we talk about right now. There's two different things going on in the market at all times. There's order flow, which is it obvious? And how long has it been obvious? So anytime you're looking at a chart, you have to say, who's in charge and is it obvious? The answer comes back, yes. Then you move to the next stage. The next stage is it still valid? So a lot of the market that just started rallying over the last week or so as earnings changed, a lot of people were looking for the market to go down, but the tape changed. So it's still obvious in the big picture, but short term, it's no longer valid. And that's that bounce that we just had. So order flow, is it obvious? Tape reading, is it still valid? And how do I know if it changed? Now, the last part of the equation is something that is really special because this is where you elevate yourself as a trader, is if I'm about to hit that buy button, how much profit potential is likely if I buy it right now? Now, if we could take the example here and we're going to tie this back to Netflix. If we could take the example right now in JP Morgan, this clearly earnings, monster move, bullish gap, bullish gap, bullish gap. If you bought this stock yesterday looking for a new trade long, you want it to be a buyer, you had a couple of things against you right now. We rallied hard, bullish gap, bullish gap, bullish gap, right? But ask that last question. If I buy right now, what is the likelihood of it continuing in exchange for the risk I need to take? So don't forget, there's order flow, and we make money with the push and the pause within that order flow. The push is where we make money. The pause, which is the most important part, is how we manage risk. The pause is getting it as close to the optimal entry as possible. If a stock like JP Morgan right now has rocketed this hard and this fast and into an area where sellers have pushed the stock down, it's not a good trade yesterday as a new trade. So again, what we're looking for in that strong sector, which is financials, and then breaking that down even further, which is bank stocks. So I'm actually going to show you how we map that out as well. So we go back over here. So we went from the market to sector rotation to now breaking it down into industry groups. We have bank stocks and travel services. So you probably want to take a quick screenshot of that and get an idea. So JP Morgan's been on fire. I'm expecting a pause the next couple of days before starting a new swing. So essentially what I'm outlining here in JP Morgan is the sector financials and the group bank stocks are reporting. The market likes what they're reporting, very similar to what happened in Netflix yesterday, and they rocketed higher. So that was a much shorter time frame trade, but it went too far to justify a new swing trade yesterday. So raise your hand if you've ever put on a trade. You're like, wow, this is super obvious. As soon as you buy it, it goes up a little bit and then comes crashing down. You get out of the trade because you have good discipline on your stop loss. And then as soon as you get out, it rockets higher again without you. And you're like all angry. And instead of having coffee in here, maybe you have something stronger because you're mad. Don't do that. Learn the optimal entry. Get price action in your head. Say, obvious. Is it still valid? Is this the right time? Is it the right time? Is that last part, because we have to justify the risk because the reward potential is likely. Before you place your next trade, ask yourself that question. Can I justify the risk because the reward is likely? Not maybe, not I hope so. This is the difference between probability and predicting. Probability means it's already happening and you expect it to continue. But then you got to take that last part is if I accept risk right now, is it likely it's worth me taking that risk? And that's going to take us over into Netflix from yesterday. So Netflix earnings came out. Netflix earnings was pretty good. They were, normally with Netflix, it's subscriber growth, and everybody was happy about subscriber growth. But then Netflix came out and they're like, no, stop talking about subscriber growth. We're actually a real company. Read our numbers. Our financials are actually good. And those two things combined rocketed the stock higher. Now we're going to set up a trade, a swing trade in Netflix between today and Friday. So we're actually mapping out this trade right now before it even happens. So remember what we just talked about before with tape reading. Tape reading is where you're reading a price and is it getting closer to or further away from that number? That's tape reading. You know how to read the tape because when you're in a trade, you know that stock better than anybody. So what we're looking for in Netflix today, and by the way, there was some more news on Netflix. I just want to point this out for you. JP Morgan actually came out and upgraded Netflix even after what happened yesterday. There's a CNBC positive plus thing there, but you see what's going on there, possibly 40% more. If we map out Netflix and take a look at the levels, you can see that this level here was a monster level going all the way back to earnings over here in April. Got up to that level, smashed down, smashed down, smashed down, got up, smashed down, and now you can see we're finally through that level, right? This is where we're about to open. The next level is all the way up here at 330. I don't think we're getting up to that level anytime soon, but it is interesting. So here's the play that we are looking for in Netflix today. What I'm looking for is it's going to open somewhere today around 270. I know that my expectation is I'm looking to hold the stock over the next few days. So depending on how often you could be at your screen during the day, I'm generally setting this trade up after the market opens and giving the stock an hour to get going and see if we get follow-up buying pressure. So here's the trade. And if you can't be at your screen at 10:30 in the morning, that's perfectly okay. You can still paper trade it with us, watch the trade. If Netflix opens here and with that upgrade, we get a little bit of a rally, right? We get a rally off of that. Now we have today's opening price, which is Wednesday's opening price. And then we have the price of Netflix at 10:30 in the morning, 1 hour after the market opens. Now, here's the thing. You got to listen to the whole trade. If Netflix is higher than the opening price, so it opens at 9:30, and if the price is higher, that's going to be my entry and the stop loss. So now we have a risk, wherever that is here and wherever that is here. Now, that's the risk part. Remember, we just spent a lot of time talking about risk. Now we have to say, if we're looking to hold the trade through Friday, what does this stock normally do in order for me to justify that trade? Now, here's the thing. If this is where it opened and Netflix is down here at 10:30, there's no trade. I want to be clear about that. If this happens, then I plan to do this. If what I'm looking for does not happen, then I'm doing nothing. That's trading at the highest levels where you have everything written down. And after the market opens, you're just basically sipping coffee because it's all planned out. You're not stressing out. You planned what you were going to do beforehand. Now, here's the thing. Whatever that dollar amount is, we need to justify that risk based on what the stock normally can do. So on the daily chart, we're going to use something called average true range to say, what does Netflix normally do? And we're going to work our way over into a different software. We're going to go over to Finviz, and we're going to take a look at Netflix. We're going to look at over here is this number over here, ATR, $13. Let's just say it's $13. Let me actually zoom that in a little bit for you. Average true range is what the stock normally does from the low to the high. Now, generally speaking, on a swing trade, we'd like to make at least or project 3 to 1. Reward of 3 to risk to 1. So essentially what that means is if we're looking to make 3 to 1 based on where it is there, if Netflix can rally what it normally does over 3 days, we have to justify that risk. So if $13 over 2 days would be $26, so basically talking about part of Wednesday and into Thursday and Friday, we know that the risk is going to be wherever that open is. Now, if this opens here and the risk is like way up here and it's already $13, that's probably not going to be a good risk reward. But if it's smaller than that, then we have the risk that justifies what the stock normally does the next couple of days. Now, if that happens to be new to you, sometimes you learn it for the first time. You got to see it once or twice. So maybe you might want to watch that video again or this part of the video again. But that's how we're setting up the trade. So to keep it super simple, Netflix is going to open somewhere around 270 today. If after the first hour of the market, it's above that level, that's going to be the opportunity. There's the entry, there's the stop loss, and we're looking to hold on to that trade until Friday, as long as that trade is still positive. Now, if it does move in our direction, we're going to hang on to that idea and use what's called a trailing stop loss. As it moves up, you're going to continue to move up your trailing stop loss. Best case scenario, it follows through till Friday. If it rallies higher and pulls back and takes out your stop loss, okay, that's the way it went. It didn't follow through. If it opens here and trades lower and around 1030, it's not above the opening price, we leave it alone and we simply go to look at another trade. That is how you map out your trades. Far too many people react and just put it on because it's moving. What we just outlined is how to run a trading business. We set up our risk. We looked at the potential reward. We talked about exactly what needs to happen for us to even get in the trade. The challenge or the obstacle, the roadblock, let's just call it a mistake that a lot of people make, is they place a trade even if it's not doing what you planned for it to do. I get it. We've all been there. You're excited. You want to trade. You read the headline. You want to get involved. And I get it. But that's not good trading. Good trading is knowing what you're looking for. And then when it's there, taking action. Preserving precious capital happens when what you're looking for does not happen. And you have to be okay with doing nothing and then just go look for the other ideas. Okay. So we're looking for expectations on Tesla to beat. If they match or miss, Tesla's going to hit the skids today. If the expectation is beaten, depending on how much they beat by, Tesla has a chance to head back up towards that 300, 310 level. It's all about the expectations after hours today. We already know Netflix came out yesterday, and we just mapped out a potential trade in Netflix today. And we also talked about the travel stocks. And you can take a screenshot of this because we're going to put that up on the screen for you again one more time. The travel stocks that we're taking a look at right now: travel services, Airbnb, Carnival Cruise, Royal Caribbean, Expedia, and Trip. Those are the ones that we're looking at. And if you like the other side of the market, we're actually taking a look at a short sale in Duke today as well. We got a lot to cover today right now, but remember the big picture. We're in that 4-week choppiness in the market right now. If the market is driving you batty right now, if the stock market price action is confusing you a little bit, you're not alone. It just means that you have to recognize that and say, you know what? I don't get it. I don't understand what's going on right now. I'm perfectly okay. I'm going to go golfing. I'm going to go bowling, whatever you like to do in your spare time. And you just step away from the market until it does what you're looking for. So let's actually set up next week. We already know that the market, and specifically the S&P 500 on the weekly chart, as of right now, we are actually seeing well bid, higher highs and higher lows. So if next week opens and we have the same type of price action and this starts to unfold, maybe we can dust off that buy button and get a little more comfortable on the buying side. However, that's if this happens, then we plan to do that. However, if that does not happen and we trade lower, then that big selling pressure that we've seen for 2022 kicks back in, and the better trades are going to be in the other side of the market. Trading is as simple or as complicated as you make it. Look at a chart and say, is it obvious who's in charge? If the answer comes back yes, move to the next two steps. Is it still valid, and where do I get in? If the answer comes back no, take a step back and say, I'm not risking my money because there isn't something obvious to do. All right. Thanks so much for joining me here today, everybody. I really appreciate it. If we did a good job today, do me a favor, hit that subscribe button, hit that like button, and I'll speak to you soon. Thank you so much.